Good morning. I'm Randy Robbins, the Vice President of our HOA Board. With me today is Ron Varner, our Treasurer. The goal of today's action of having Ron out here is to give the community a insight to our 2022 total financial picture of how we ended the year. So I'm going to turn it over to Ron at this point. He's going to discuss quite a few things regarding finances of our community, and we're going to put as much as we can into layman terms. Some of them will probably be in financial terms as well, but hopefully we'll be able to get a lot of information out to all of you in the community. So, Ron?
Okay, thank you very much, Randy. Today I would like to review the financial state of the Sun Lakes Country Club Homeowners Association. There's a lot that makes up what is the health of the association. I'll kind of do a quick how we budget, how we report against the budget, and the number of financial statements and reports that we have, which are pretty significant and pretty confusing to those of you who aren't familiar with trying to work through very, very detailed financial statements. And then lastly, possibly I'll just end with a very short February Treasurer's report on where we are today. So the talking about the Treasurer's report, it covers homeowners association operations, so underscore operations. And secondly, it deals with reserve and CIP fund balances as compared to budget. The budget establishes basically the cost for running the homeowners association, and we are a 3-fund reporting organization, which means we have a homeowners association fund, we have a reserve and replacement fund, and we have a capital improvement fund. So the budget basically establishes the cost for all amenities and costs to run our community. And all of that is in the budget, and it's a little confusing on how the funds work versus how the HOA fund works. But we have an immense number of amenities, and it's often confusing about what's the cost of these amenities, but they are in the budget and they are budgeted. And our amenities, we've got everything from golf courses, restaurant and lounge, tennis, pickleball, bocce ball, billiards, pool and spa, libraries, gyms, security, maintenance of common area, which is amenity if you look at it the way you should. It's there for our enjoyment and pleasure. So the budget establishes the cost for these amenities and the sources of revenues to pay all the bills. And we are a zero budgeting community. That means that we establish a budget that identifies anticipated revenues and the cost to support those revenues, such as for golf and restaurant and lounge. A loss, which gets misunderstood by a lot, the loss is an overrun on the budget. There's cost for restaurant and lounge and for food and beverage that is established each year. So a loss by definition is not the budgeted cost for the amenity in the way we report. So with that, Randy, unless there's some things you'd like me to comment on about that, I'll go to the finance.
Yeah, Ron, I think one thing that I think a lot of times when we talk about reserves, people don't, the members don't always understand the difference of a repair and replacement fund versus the CIP fund. And that if we make a large expense, that becomes a long-term asset. So if you could explain that just a little bit, I think that would be helpful.
Okay, we have two funds, a reserve and replacement fund, and by the way, for all of you that don't understand, when we look at the percentage of reserve funds, that is reserve funds only. And two, we have a capital improvement fund, which is for capital improvements or new additions to the community. And those then would become part of the reserve, total reserve needs, and not be in the capital improvement any longer. The reserve and replacement is for, just as it states, for any replacement of any of our assets that have worn out and need to be repaired or replaced. And there is a process that our management goes through to recommend, not just because it's in the reserve and replacement study, but when it actually needs to be replaced or repaired. The reserve and replacement fund is at a 65.5% of what is anticipated to be needed at a given point in time. So this was as of January 1, 2023, and inflation costs will probably have a change in this the next time we do a reserve update, which will be at the end of this, towards the end of this year. So.
Great, thank you, Ron. I think that'll help a lot of the members understand exactly what the difference of the two are.
The financial state of the Sun Lakes Country Club HOA is very, very strong and very healthy, and that's determined by the balance sheet. A balance sheet basically tells us what assets we have and who paid for them. Basically, in our case, we paid for them, and our liabilities are primarily current liabilities, and we have no long-term liabilities. And a balance sheet is a static indication of what the association or any entity that does a balance sheet looks like on a given date. So to really look at how is the association progressing up or down, you need to look at successive balance sheets. So we, in 2022, Randy wanted to focus on that. In 2022, we operated with a surplus of about $250,000. And again, we are a zero budgeting, so ideally we'd come in at zero on any variance to budget. Well, we came in with a plus. All departments operated at or below budget with the exception of food and beverage. Food and beverage is the #1 financial priority for management, for the board, and a number of committees that are working on it. The food and beverage has had difficulty in operating within the budget for a lot of reasons. COVID, clear back to 2019, there were shutdowns for a lot of repairs. Labor has been a big problem. Food has been a problem, not just because of the cost of food, but because of the availability of food. Looking at the balance sheets for the last 3 years, if you take assets and liabilities, we have what's called net equity. We have very strong net equity, which does not include the value of the common area property, the golf courses, and the restaurant. but just on the cash balances, and I'm going to have a chart here for that in just a second. But we have increased net equity for the Homeowners Association by $1 million over the last 3 years. It was about $500,000 a year. Last year alone, we increased net equity by $500,000. So the relative health of the community compared to others, our research indicates that most communities our size have reserves of 40 to 50%, and we're at 65.5. So I know there's been a lot of feeling that because of the information that we supply, that our reserves are in trouble and we're under-reserved. And at this point, that's not the case. So, Randy, anything you'd like me to cover on?
Well, one thing I would just like to point out, through Ron's guidance and working with the management team of our Executive General Manager, Chris Mitchell, and his team, we were able, despite the poor performance in our restaurant and lounge, we were able to make enough adjustments and cuts to still come in with to budget of over $250,000 this year. So our overall for 2022 was very strong, as Ron said, and that was created by good communication with Mr. Mitchell, with Ron's guidance and so forth. One of our good strengths with our golf course pro shop, we made a lot of money in that this year, and so I think that's a plus. And then our goal for 2023 is to get the restaurant and lounge to budget where it needs to be.
Correct. And Randy, just to be specific, the restaurant and lounge amenity cost was budgeted at just under $400,000 for last year, and the actual cost of food and beverage was around $700,000, a little over that. I think it was a $330,000 negative variance, so that actually was the loss for the restaurant. So, okay, well, I'm going to just touch basically on the financial model or accounting program that we use for Sun Lakes Country Club. And again, it's a 3-fund reporting and budgeting program, and everything is done on a full accrual basis. And we develop a budget, I would say 3 months of very hard work by the board, by management, and several committees that participate to develop the budget. Usually the budget's done by the end of October. The process starts probably in May or June, actually, with direction from the board to First Service, our management company, on guidelines for developing the budget. The reporting, we get a single financial report every month, but it consists of, and I'm just going to go through them, there are 9 different reports and schedules that we get. Starts with a monthly recap. We get a balance sheet by fund. We get a comparative balance sheet, which compares to the previous month. We get a major variance report. We get a report on consolidated budget to actual summary. We get an income statement by department, and we get an income statement with a rolling 12-month by department, and we get an investment report. And I can let you all know, even my background, I had a lot of experience with various types of financial reporting. It took me about a year to get really to be able to quickly understand our financials and to properly interpret them. And so, unfortunately, this results in a lot of misinformation or lack of understanding by looking at one report that has a purpose for one thing and it being used for something else. The Treasurer's report that is done each month looks at month and year to date. And with that, why don't we go to chart 1? Chart 1 is basically, it's one of the reports. It's the consolidated budget to actual summary. And it is a quick summary of HOA operations, and again, underscore operations. And then it breaks out by HOA operations, which are all departments other than food and beverage and golf and bingo. Bingo we kind of just ignore, but we have to report on bingo because we handle the funds. But that report gives a year-to-date, and why don't we just do the and take a look at it for February. So if you can see the report, there is an actual for the month, there's a budget for the month, and a variance. And Randy, I'm thinking I'm going to talk to Chris about changing the verbiage on variance,
Okay.
because that's profit or loss.
Right.
And that way it would be very clear what's profitable and what's a loss.
All right.
The February, I'll just go to the bottom line for HOA operations, and again, this excludes any funds. We had a profit of $132,988, and that was $53,538 better than budget. So that is a profit in total. Year to date, we have $187,974,000 profit, and budget was a loss of 203. I'm sorry, that was a loss for the golf courses. 94,385. So for the first 2 months of this year, we are $93,000 better than budget, and we can thank the weatherman a little bit for that.
Yeah.
And that's primarily due to reduced labor and reduced irrigation and water costs. Back to food and beverage, because as Randy said, there's a lot going on that. The board, management, a couple of committees are working very hard to deal with the issues causing negative performance versus budget. And also, January, there were some unaccrued food expenses, which those of you who looked at the January food and beverage was almost on budget. However, there was about $25,000 in food costs that should have been there that are now in the February costs. Year-to-date costs are correct, and again, we are $93,289 better than budget. So again, we're going to talk about just changing some of the designations,
Okay.
so it's clearly understood. Back to the financial health and the balance sheet indicating that. Let's go to chart number 2. Chart number 2 is a graphical representation of the balance sheet. So if you look at and this is right off our balance sheet, and the balance sheet is the comparative balance sheet and the balance sheet by fund. They're one and the same, except the balance sheet by fund has 3 columns: HOA, reserve and replacement, and capital improvement.
Right.
So if you look at the, again, chart number 2, it shows all of our assets, and the red shows our liabilities. All of our liabilities are current liabilities. We have no long-term liabilities, no loans, or any future payments that need to be made. And that's an important designation. In addition, total liabilities include prepaids, prepaid assessments, and golf dues that are paid in advance, and accounting regulations indicate you cannot report those as revenues until you provide the service. So if someone pays golf dues for the whole year, each month 1/12 of whatever they paid goes into revenues, but about $1 million of this is in liabilities. So the liabilities on what we owe is about $1 million also, and that's important to understand. So HOA funds were $543,000. CIP funds are about $2.1 million. Bingo has $6,700 in the bank. I know you'll all be happy to know. Reserve funds are $13,748,000. Very healthy amount. Other assets, which are undepreciated possible capital improvements that still show up before they're depreciated, are $948,000, and there's a whole lot of miscellaneous stuff in that. Total assets are $15,383,000, which leaves total equity at $13,400,000, and that's at the end of February. So again, very healthy. And let's go to chart number 3, which didn't come out quite the way I hoped it would. But chart number 3 is just a comparison of a balance sheet of 2022 versus 2021. And total equity, again, 2022 ended up at $12,931,000, and ended at the end of 2021 it was $12,224, so almost a $700,000 increase in net equity. So the and again, there's the financial, or the treasurer's report, and the financial reporting is hopefully going to become easier for all homeowners, residents, stakeholders to understand and to properly interpret. So I'm going to be, before my term ends, which I think is at the end of this month, I'll be making some recommendations to the board on how to do that. So,
Right.
Any questions, Randy?
No questions, but I would like to make a couple just clarifications, or not clarifications. I'm going to call it, putting it in layman's terms. When Ron referenced the accruals, and where we had an accrual, I don't want to say error, but wasn't accrued correctly, for lack of a better phrase. An example is, we get a delivery of food to the restaurant on January 30th. That is counted in inventory on January 31st. However, we may not see the invoice for a week or two. So therefore, that would have to be accrued. If we got the invoice February 5th, we have a system that manually moves that into January. However, if the financials are already done before we get that invoice, we cannot put it in there. So then it, as I use the phrase, catches up the next month. So I think that's important for people to know when you hear or happen to see a variance comment that says misaccrued. It's not necessarily an error. It's just sometimes it's timing related. Is that a good way to explain it, Ron?
Yes, it is. And accrual method versus cash method means that the accrual takes place when you receive the bill for a service or anything that we purchase for the restaurant, food, merchandise for the golf shop, as opposed to a cash basis is you only report the revenue or expense when you receive it or when you pay it. So, and as Randy said, oftentimes just because if it's late in the month, the accrual doesn't get posted or recognized exactly the minute it comes in. And when we do have those of you who review all of the financial reports, there is a major variance report. So any variance from budget over $5,000 on revenues, expenses, gets identified, and there are a number of variances that are accruals. So.
Yep. That's the only question or comment. Oh, one comment I will make. February's numbers, overall numbers were good. Again, poor performance in the restaurant and lounge. But our golf courses were completely closed for 9 days. That doesn't even count the number of days the golfers said it is too cold, it is too windy to play. So, but the golf course operations still ran at a very, very good. Just missed the sales budget, even though we were closed for nine days. So I think that's something important to show. Quite frankly, thanking our director of golf, Brian Garlington, for his hard work in keeping the operations in the black above budget. So,
and just I'll make a comment on both the reserve fund and the capital improvement fund. So on the consolidated budget to actual summary, we also report on both those funds. And before Dan Comerford passed away, he and I had a number of conversations about how we're reporting that. And so reporting it as a profit or loss. Every month there's $52 of everyone's HOA fee that goes into, for this year it's only the reserve and replacement fund. So I think the amount's like, I've kind of forgotten what the total number is, but there's an amount that goes every month into the reserve and replacement fund, and then some months there's no projects that are reserve and replacement, so the fund increases, or if we do have a project and whatever expenses are paid on that project then come out of the fund. So the funds go up and down depending on the timing of projects, and again about 95% of the HOA fee is for operations and about 5% for reserve and replacement.
Yeah, and on that, like I mentioned earlier, if we had a multi-million-dollar project that had to be done out of our repair and replacement fund, we would have a asset for the length of that term. An example, at some time in the future, we're going to need to re-irrigate the golf course, and that's going to be about a $3 million job minimum. And if we do it out of that, it is going to lower our percentage, but we have 30 years to get that back approximately. I mean, it's flexible because of other things within the community, But the point is, if you have a major expense, that's what the repair and replacement fund is all about. It's not, the word reserve sometimes confuses people and think it's a savings account. It's actually not a savings account. It's really an operating account for repair and replacement.
And just lastly on that, by law, we can only use those funds for that purpose.
That's correct. All right. Is that all you've got, Ron? That's about all I've got.
Well, I could go on much longer, but everybody will be falling asleep.
They probably will. Hopefully we can wake them up right now.
Yeah.
I just wanted to thank Ron for stepping in as a treasurer, non-elected official, volunteer, to step in when Dan Comerford passed away in October. And I think Ron has definitely been an asset to the board, and we appreciate your insight and your knowledge, Ron.
Okay, thank you, Randy.
All right, thank you.